because I have to reclaim the host here. Oh, it says it's being live streamed.
There you go.
Well, it looks like we're live. All right, let me reclaim the host and share my screen. Reclaim the host here. All right.
Welcome to our 2023, March 22, 2023 FOMC announcement meeting. Wow, Vince, this is one of these meetings that we haven't had in the last 18 to 24 months. My name is Raul, by the way. I'm the coaching and education coordinator here at Trading Winds. Always a pleasure to be here with you, with our head trader, Vince Vora. Vince, how are you?
I'm well. Thanks. Hi to everyone. You're right. It's been a long time since a Fed meeting meant this much. I remember back in the day, they used to be super important, and you know, that hour afterwards, trading was absolutely crazy. More recently, you know, they haven't been as active, but today's decision is huge. It is huge. So we are what, about 4 minutes away, 3-4 minutes away. And after they announce whether they are going to hike or cut or stand pat, Fed Chair Powell will be speaking. So that's probably going to be the most important piece of this, but it'll be interesting to see. Right now, before we go any further, the expectation is about 83%, almost 84% of a 25 basis point hike, and about a 16% chance that they stand pat and do not hike right now. So anything other than that, I think will be a huge surprise for this market, and we will really see some movement. So let's see what happens.
Yeah, in the past, what we've noticed is the announcement comes out, the market sells off. Mm-hmm. Chairman Powell comes out at 2:30 and says, whoa, let's just slow things down here. Market stabilizes and we go up. How did we get to this point from the previous meeting where it's not a question of how much are they going to raise rates? It's a better question of, are they going to raise rates, or geez, would they could they even lower rates here?
Right. And it all stems from that banking issue that we've seen recently with Silicon Valley Bank and First Republic, Credit Suisse. You know, a lot of people blame Powell for raising rates so quickly and so dramatically that has ended up putting a lot of pressure on the banks. Now, I would argue it's the mismanagement of the banks, not the Fed doing what he did. But with the banks being under so much pressure, you know, there's pressure now on Jerome Powell and the Fed to try to ease that pressure. And the way they would do that is to either not raise at all, or better yet, start cutting rates again. Same with quantitative easing and quantitative tightening. We were, you know, in major quantitative easing mode for many years. And then after the COVID pandemic, once the Fed started to raise rates shortly afterwards, they started their quantitative tightening program. Now, we want to know from Jerome Powell, are they going to stop quantitative tightening and start easing again? Or, you know, what are they going to do? So there are a lot of unknowns here. I hope he's very clear and lays out the plan for the future, but there's always the potential that he just says they're going to monitor the data and take it meeting by meeting. But again, we are less than a minute away.
Well, my clock says 2 Eastern. I'm trying to get the announcement here if we can. You know what? Watching the markets will probably give us an idea of
so
right.
That's right. Futures are flat, but I'll let you know. I've got my screen on here. Steve Leisman now from CNBC. Let me just hear what he says. Oh, it's a quarter point raise.
Yeah, quarter point raise. Okay, so inflation still seems to be where we are with the Fed here. I'm curious to see what their comments will be. Dow was down 76 points just before the announcement, now down 19. S&P up a little bit, was 2.5 points to the good, now about 16 points or so. So market seems to be taking this in a positive way.
Yeah, in stride, really. You know, really a nothing burger so far. I mean, I guess it's because that's what the market expected was a quarter point raise. Um, Maybe all the volatility will come in once we hear Jerome speak. For now, no, futures are pretty much, you know, where they were. I mean, we can call this flat, completely flat. Um, so not much of a reaction at all here so far. The little bit that there has been to the upside, but really nowhere near as dramatic uh, as we thought it could be. But again, they raised a quarter point, exactly what the market was expecting Jerome Powell to do. The key now will be to hear from him, and specifically on not only how he plans to handle a banking debacle and whether he's going to, you know, what he's going to say about providing assistance there, but in going forward with rates and quantitative tightening. So interesting, but a real lack of response right now in this market.
What I find interesting when we go back and look at this, so many moving pieces. We look at the US 2-year Treasury, US 02Y on TradingView here. We have the steep sell-off that comes after steep sell-off, meaning the yield being reduced, the bonds going up in price from the 9th of March.
Correct.
And then I'm going to go to your screen for a second. See, there's the 200. That's what I was looking for on your chart, on the daily.
Yeah.
You notice it finds a little bit of support there. We had asked a question in our members market chat asking when the yield was right around 5%. It was, I think, 4.99, whether they thought that the next stop would be 6% or 4%. And we were mixed. We were just about even on where we would end up. But boy, did we get to 4% quickly, didn't we?
Yes, it took 2 days and we were there. And again, that was the start of SVB's debacle, the Silicon Valley Bank, you know, coming out with all their issues. So, and in 2 days, we dropped a full percentage point here. We actually dipped below 4% for a little while, then back above. We're just about there right now, 4.03. So, yeah, and now that the Fed has hiked another quarter point, that could give yields a bit of a boost. We'll see. The dollar isn't moving much either, dropping a little bit here, 0.5 cent. That's something.
Now, I'd asked you a few weeks ago.
Mm-hmm.
I said, if you're getting, and some of the big banks were offering about 4.8, almost 5% for a 1-year or 2-year fixed term on a deposit. I said, would you do it? And you said, no, you wouldn't do it. Why did you say no at the time? And has that opinion changed any?
Yeah, it may have. At the time, it was because I thought rates would continue to go up. So I thought, why lock in? You know, they might get even better. They just posted something I saw on CNBC. They said that although they hiked a quarter point, they left their year-end projection to be exactly the same. So they did not up their year-end projection. So, which was 5.125, I believe.
Mm-hmm.
So where does that leave us? We are now in the 4.75 to 5 range, right? So that leaves maybe one other small hike, and we're there, right?
Yep.
So you know, for those out there looking for the Fed to stop, the minimum we can say here before we hear Jerome Powell speak is that we're getting very close to that point. If they believe their year end, at the year end, they would be at 5.125, and we are at 4.75 to 5. We're almost there. We're pretty much there. So that's interesting. It's going to be. I'm really looking forward to his comments to hear what he says, especially about these banks. But you can see on the futures market here, the Dow up a little more now. Same with the S&P, the NASDAQ. We are pretty much at the high of the day. So market so far is liking this. Hopefully, not hopefully, but we'll see what Powell does if he spoils the party here or not, or adds to it. We'll see.
So one of the things that had happened last week after the banking debacle was a lot of money came into cryptocurrency and gold.
Correct.
Gold, old, boring. Nobody wants to talk about it. Cryptocurrency, everybody wants to talk about. Now, you were telling me that, during or just past the pandemic, you had relatives, friends, people, casual acquaintances coming up to you and saying, "So how about this Bitcoin, huh?"
Mm-hmm.
How about this Bitcoin? There's a recent prediction from a former CTO at Coinbase saying Bitcoin to 1 million by the middle of June. And before you ask, June 2023, not June 30, 23. Where do you come out on that?
Listen, whether you're a believer in Bitcoin or not, I think that's a ridiculous projection. I mean, I don't claim to know everything there is to know in the crypto world. And in fact, full disclosure, I know very little. Still not a total believer in it. But to go from 28,000 to 1 million in 3 months, I think that's highly, highly unlikely. Having said that, looking at the chart, yes, we've had a real nice move recently. Bitcoin has benefited from the banking crisis. Now, as we get closer to this 30,000 level, that's where I think the next level of resistance is. So we'll see how it handles that. Does it get quickly rejected from there and we go back? We settle back down, or can we bust through there and keep forging ahead? We'll see. We're at 28,775 right now. So the rally is intact. As far as gold goes, certainly off its highs from today. Still up 23 points right now, but was much higher early this morning. So gold has pulled back with after the Fed announcement here. So let's see. Crude oil's gotten a bit of a bounce though. Up $1.60. I think we were down this morning when we had our chat with our members. I think we were in the red. We're up 1.6%. So that's a healthy move on crude. I guess we'll have to listen closely to what Jerome Powell says and see how that affects the rest of the day here.
Looking at the 5-minute chart on SPY, you get that move that happens between 2 and 205. We end at 400.4 approximately. We go all the way up to 401.7, but boy, it fell right off after that.
Yeah. I mean, volatility is expected, so some back and forth is expected. I'm just surprised at how small the move has been. I mean, on one hand, yes, we got exactly what the market was pricing in, what it was expecting, a 1/4 point hike. But still, considering the bank crisis happening right now and everything, I'm surprised we haven't seen a bigger swing here.
We were talking this morning about even in this volatile market, a couple of stocks hitting all-time highs. We had Supermicro Computer, which I believe is SMCI, if I'm not mistaken.
Yes. Actually, I have the 5-minute on. Let me go to the daily. There it is. A real nice push the last 3 trading sessions back into new all-time highs. But I'll show you the weekly. This one has been trending for a while. There's the monthly. Just a real strong move overall. And it doesn't look like it's over yet either, right? So interesting. Good looking chart.
There was another one that hit an all-time high today. I dare you to see if you can remember which one it was.
Hit an all-time high today.
Yeah.
I can't. Hershey,
I'm looking through my list. No, it was Lattice Semiconductor.
Oh, yes.
LSCC. And in that time, between our session this morning and now, there are 2 others. These are we only look at the mega caps here.
Yeah.
For this particular thing, Boston Scientific, BSX, another all-time high, and Arista Networks, ANET, all-time high.
Yeah, nice looking charts. I mean, look at Arista Networks. It has completely ignored what the markets have done this year. In other words, if you look at the S&P, let's go back and look at the SPY and look from January of this year, right? We've had this pretty nice move at the start, and then this strong pullback retracing that move. That's where you look at ANET, excuse me, and it's been pretty much straight up. So it's ignored what the market has been doing recently and just been forging ahead. So very strong move overall, and just a nice clean trend. And now that it is at all-time highs again, no resistance overhead, who knows how much further this can go.
We talked about gold just now. We didn't talk about silver. There was one particular stock. Take a look at AG, First Majestic. Gap down yesterday, closing near the low of the bar yesterday. No follow through today. Is there enough momentum here for you to consider a short position on a $6.14 stock?
You know me, I hate that price point. I like to short something that's 30 or above. Something below 10, real tough here to short. The way I look at this chart, though, on the daily time frame, with this huge gap down and now this retracement that basically, I mean, if you look at the prior close to the gap, yeah, we're way off that. It's still rallied a decent amount. Realistically, now that it's coming back into this activity, it is likely to find resistance there and then roll back over. A safe entry, a very, very conservative entry, would be to wait for it to get back below the lows from yesterday. That would obviously be an easy short from there. But, being further away from the 20, the further you are, the riskier it gets. So I'm not comfortable with this, but for anyone out there who can tolerate a lot more risk, it might be something to consider.
For those of you that are listening on YouTube live, and it's the first time we've done this, if you have any questions or would like to take a look at some charts, please put them in the chat. We'd be happy to do that for you. NAT, Vince.
Mm-hmm.
If the bar closes as it is today on the daily chart,
yeah,
is this an interesting place for an entry?
It is. If it can, as long as it closes above the blue line here. Let me just clean up my charts here. 1 second. There we go. Just to make it a little cleaner. As long as it closes above the 20, that would be fine. We have a slope upward. We had a nice significant pullback recently, but right into support, right into these prior highs, and then bounce from there. And so that's a healthy retracement. Now you get a quick bounce, which means, it confirms it's held support, and then a close above the 20. That's a nice positive sign. With slope on the 20, likely to see some follow through there. So that looks good. You come back to the weekly, and you can see that we had 2 sharp weeks of pullback, but this week has been very strong. It has completely reversed last week's move. So a complete 180 here. That looks good. That looks really good. And the monthly, although it's more or less been consolidating for many, many years, recently you can see that we have started to move, and we have cut through some of this overhead resistance. So overall, I'd say yes. If it closes above the 20, you can consider that.
Zscaler, ZS, $112 right now. Nice momentum on the 20 period moving average on the daily chart.
Yeah, I'm hoping it moves up here a little closer to the 20 and then gives us a nice re-entry short. That would be nice. The trend clearly is to the downside. If you look at your chart, and this is the weekly time frame, we're basically going from the top left corner to the bottom right. That's what you want to see for a short. And so When you look to your left and there really isn't anything in the way of support, that's even better, right? So a bit more upside here, and a re-entry candle, and that would look great for another short.
Let's go back to the Fed for a minute. They've announced that they're expecting just one more rate hike for the rest of the year. Why isn't the market just ripping higher?
Yeah, I don't know. I think they're waiting to hear something from the Fed about how they're handling or plan to handle the rest of this banking issue. Maybe that could be it. I don't know. Or just, the Fed hasn't done enough to help alleviate the concerns that most people have about this banking issue, right? I think they would have been much happier if he held rates where they are or started to cut rates, right? The fact that he's still in hike mode, right? He raised a quarter point, expects another raise, even though he hasn't said we will keep raising for who knows how long. At least he's put a target on it and is still planning another raise. I guess school of thought out there is he's not doing enough to really help out the banks here. But again, once he has a chance to speak, we can monitor the futures while he's speaking and see how that is. But yeah, it looks like we've given up most of the gains here, haven't we, on the Dow anyway?
And NASDAQ was up over 150, I think, shortly after the announcement. It's at 80 right now.
Yeah.
A big NASDAQ name. Apple, I didn't realize this. As I look back on the daily chart, boy, we had been in a channel, just broke out yesterday, follow through today. What do you think here?
Yeah, and I mean, obviously, Apple is a very, very strong stock. Has held up very well all year. But now is looking more interesting. Above this level, I think the path forward here is a lot easier. When we were below this level, we projected that this would be resistance, and for good reason. It has been numerous times in the past. But breaking through it, and if we can follow through now for the rest of the day and into tomorrow, the path to all-time highs is easier, and we're not that far away. That's what's amazing, right? Yes, we're at 160. All-time highs are just above 180, 182 or so. We're not far from all-time highs. So, and look, we pulled below the 20 briefly on the monthly time frame. We're right back above it. So, it'll be interesting to see if this buy here sticks by the end of the month. I mean, the candle has not closed. That's why we can't say for sure that it's go time here with Apple. But what's today? 27. Oh, actually, we got about another week to go, so not that much farther to go. If a week from now this buy sticks, then yeah, I think we could be headed to all-time highs here.
A stock that has been in a nice trend, it has been to the downside, is Antero Resources, AR. Now, we looked at our most recent trade on this one. We looked at was that March 6th sell that came on your indicator. Indicator
worked out beautifully
on your chart right now.
Yeah.
So is this a place here? Now we've stabilized. We seem to have found support right at 2150, approximately in that area. If you're in that trade from March 6th, is this a good place to scale out, take profit, or is this a good place to close out the trade altogether?
This was a target identified ahead of time, and let me show you why. When we bring in more data, these prior highs right here. So there was a real gap in support from around the 30-ish level down to 20 or 22, right? And that's why we liked that trade as much as we did. There was very little support along the way. So somewhere in here is where we took that trade off the daily chart right here, right near 26, down to 22. So once you get there, at a minimum, you want to scale out a part of your position, right? And again, it's different from person to person. It depends how aggressive you are as a trader or how conservative you are. For some people, taking all the profit there, considering that just about as clean of a trade as you can, be very happy with that. I would scale out about half myself there. And now, it's bounced off that level, but not very much, right? Not a very convincing bounce. And today, so far, it looks like we may end up closing out the day with another reentry to the short side. So the key here is, can it clear this level? Because if it does, then there's less support below again. We could be in for an even bigger move, right? So you could take the full profit there. And if it continues below that point, reinitiate a position, or you take half, let it bounce. When it breaks, put on the other half. Again, there's many ways to do this. And you have to decide what kind of trader you are. If you're a little more, if you're aggressive, on a break through that level, you can jump in. If you're a little more conservative, especially since we're farther away from the 20 here, what I would suggest is you let it break through and then wait for it to pull back and retest that level. By then, the 20 will likely catch up, and then you take a short from there. But that has just played out beautifully. But, especially in a volatile environment, when you get a move your way quickly and you hit a target, you definitely want to take some off the table.
All right. I got bad news for you.
What's that?
General Motors will end production of the Chevrolet Camaro in its current form early next year.
Wow.
Yeah, I know. This is heartbreaking, isn't it? You probably had one of these or wanted one of these.
I did not. I've certainly ridden in one, but no.
You didn't want one? What was the
no.
car? You're growing up, you're in high school, you get your driver's license at 16. What was the dream car at the time?
Oh, the Mustang, the Ford Mustang.
Really?
Yeah. Yes.
I pictured you as a Firebird guy.
No.
Blasting those AC/DC tunes as you're riding down.
On the 8-track?
I don't think you're that old. Excuse me.
Yeah.
Pardon me. All right, let's take a look at GM. All
right. Well, GM really, if you look at this, and especially on the weekly time frame, kind of obvious we're stuck in a range here, a channel. So from the low 40s on the upside to the low 30s here on the low side, we're just bouncing nicely in between, and we're still there. We're closer to the lows, but we're there. So what you want to wait for is a break, either above 42 or below 31 here. And if you get that, there is room for a decent move either way. If it breaks above the high, there is room to go to at least 48, if not higher. Really closer to 52. That's where I think there's more resistance rather than just this level. So you've got about a 10-point move to the upside at a minimum. To the downside, it's like falling off a cliff. You look to your left and there's support here, but below this level, there's a real gap. So we're likely to come back down to these prior lows, which actually on a percentage basis would be about a 50% drop down to that level from 31 to about 16. So there's a big move coming in GM. The key here is to be patient and wait for one of these levels to give way. The longer it goes on, the bigger the move will be coming out of it. So you will be rewarded for waiting, but you've got to have the patience to do so.
A couple of requests from member on YouTube Live: Caesars Entertainment, CZR, and Home Depot, HD.
CZR, let's start with the daily time frame. Recently it's pulled back sharply here. It looks like we're getting another reentry here to the downside today, even though we're far from the 20. On the weekly, again, we're in between key levels. No doubt it's been more or less sideways, going back to last June, really. Not much movement here. Now we're back below the 20 and headed back towards these lows. So again, I would treat it in a similar way. What's kind of scary here on Caesars is that if we go a little lower, and I'm going to draw a line here, right in this area, right around 35. Okay. There's a series of lows here, over here, 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 and all through here. Very significant level of support. But if we break below 35, I would really want to be short this. I mean, there's a real gap in support. So, with our members, we call that falling off the cliff. And I think below 35, this falls off a cliff and you see some real sharp selling. On the flip side, if it holds support and then clears a technical high, a major high, which would be this 55, 56 area, then you're off and running to the upside. So again, sometimes trading can be extremely frustrating when you're caught in a range and waiting for the breakout. But, usually when you do finally clear that breakout, there's a huge move. So the payoff will be there. What was the other symbol?
Home Depot.
Home Depot. Thank you. Home Depot. Talk about a range on Home Depot here this is the daily chart. Let's look at the weekly. Yeah. So again, we've seen that a lot. Why? We've seen the S&P in a range here for many months, and that's why. But I think, the market as a whole is getting close to a breakout one way or the other. And so hopefully we won't have to wait much longer. But below 265, I think Home Depot's clearly a short, and above 330, it's a long. I would much prefer to see this make a move above 330 because there really is no resistance there. That would be a real nice run to all-time highs. But either way, should be a nice move coming.
We had talked about the US dollar briefly.
Yeah.
Real strength in it a few months ago, real weakening in it recently.
Yeah, and it looks like a real nice short here. Now, this is the weekly chart. Again, we want to see these bars close before we do anything. It's at the low of the week. So will the rest of today or Thursday, Friday change this? Probably not. In all likelihood, this will end the week with a nice short signal. So the question becomes, where's the next target? How much further does this have to go in the near term, that is? And I think it's the top of this little area here. If you go back, we had highlighted this a while ago with our members. There's a lot of congestion in there. So that is going to act as support. And in between where we are now and there really isn't much. So this has a clear path down to 98. We're at 102. We can go to 98. That's a 4-cent move. That's not small. That's not small. So definitely have room for profit there. But from 102, we're looking at 98 if this re-entry short sticks by the end of the week.
All right, a few others we wanted to look at. GameStop came out with earnings that were better than expected last night. Stock up 40% today.
Yeah, crazy number. Real sharp move. I'll show you on the daily that gap. There it is. So, massive move percentage-wise, 40% overnight because of earnings. Now, earnings were good, much better than expected. They were expecting a loss of 13 cents a share. They actually came in with a gain, a profit of 16 cents a share. Their revenue also beat the estimate. So that's why we saw this gap today. Question remains, though, how easy is the road ahead? There is still a lot of activity overhead for this to clear. So it doesn't look like it's going to be an easy path forward. And it looks like Jerome Powell just stepped up to the podium here. So he's going to start speaking soon. So let's keep an eye on this. The Dow is actually red right now, but flat, down 4 points. S&P up 7, NASDAQ up 100.
NASDAQ just dropped 25 points when you were saying Jerome Powell just stepped up to the mic. Let's see what he has to say.
he literally hadn't said anything yet.
Yeah. Volatile, of course. We looked at a SPY strangle this morning expiring at the end of the day today. Usually those strangles are anywhere from $1 to $1.50. Today was about $5.50.
Right, correct. Where is it now?
NASDAQ up 145 now.
Do you know where that strangle is now?
I'll take a look.
So
that one that was 550 this morning.
Yeah.
Is excuse me. Oh geez, Vince, what were the strikes? 399, 398?
I believe so at the time, yes.
399 call, 398 put is about 415. So it's still it's holding up pretty well. I think everyone is waiting with bated breath to see what the chairman says.
That's right, because you would have thought after the announcement, the vol crush would have eaten most of that premium, but it's only eaten about $1 of it. Now let's see. Powell says that they took decisive action to protect banking system. Yes. I'll call it a bailout, call it whatever you want. But so I'm just looking at CNBC here on my other monitor, but do not have the volume on. So I'm just going off the headlines that they are showing under his video. He says the banking system is strong and resilient. Doesn't feel that way right now, but we'll see. So yeah, still not much movement. So he hasn't said a whole lot yet, at least nothing to spook the market or to really encourage it.
From a technical analysis standpoint, we look at a chart of JP Morgan. I haven't looked at the other banks. I will while you're doing that.
Yeah.
And you have the 200 period moving average on your screen.
I know when I can add it back here.
Let's add that back.
There it goes.
On a daily chart. Look where JP Morgan found support.
Yeah, right there.
Goldman didn't. Goldman fell right through. What's the significance of the 200 and price crossing the 200?
Goldman is even more interesting for another reason, but I'll get to that in a second. The 200, which was here, this red line, in the middle here, it blew right through it. So it did not hold. Now, the 200, like any other moving average, will usually act as some level of support or resistance, but it's one of the main moving averages that people watch. So it gets a lot of attention. Now, this was right at basically the start of all those banking issues, and Goldman did not hold support there. It blew right through. Now, we had drawn this wedge, and I'm going to go to the weekly to show you here. I know I have a lot of lines here in red, but we had attached the main pivot highs and the main pivot lows. So this wedge, we were looking for Goldman to either break out of the highs and run to all-time highs or break down below the lows. Here's what's happening. We can see the recent price action a little clearer on the daily. Not only did we clear the 200 MA that is within that wedge, but once we got to the bottom of that wedge here, we broke through, and now look what's happened over the last 3 days. We have come back to retest that level. So if we cannot get back in there and we get rejected here, this is going to be a great looking short, because what is going to happen here is if we set up short here, that's around 320, we're going to head down over here likely to about 270, 275. So there's about a 50-point move to the downside for Goldman Sachs if it cannot catch enough of a bid to get above that bottom trend line. So let's see.
NASDAQ now.
I'm just getting distracted with the headlines. Go ahead.
Yeah, I'm So NASDAQ, as I mentioned, went from 125 to 100 up to 150, now at 48.
Yeah, we have the Dow down now 60 points, S&P down 4. I know he's talking about inflation because he said that current inflation is still well above their 2% target. So I wish I could hear what he was saying about, how to get it under control while, providing the banks with all this funding, which is basically adding liquidity to the system instead of removing it, right?
Is a 2% target realistic in this day and age, or is 5% the new 2% for inflation?
Certainly, I don't think it's realistic in the near term. I don't. I think it would take some time. But one scary thing that we saw this morning was in the UK, their inflation number came out. It was 10.4%. It went upward again. So they not only are they not containing it, it's continuing to increase. Here, at least, it's pulled back a little, but nowhere near at the pace that the Fed was hoping for, right? And that's the scary part. So now the unknown is, with all the money they've put back into the system, helping the banks. And from what I understand, it's about a third of all the quantitative tightening they've done over the past year. So I think it was a little over $1 trillion in tightening, or 1.2 or 1.3 trillion, something like that. And a third of it they've put right back into the system now with the banks. So will that cause inflation to start trending back up? And if that happens, then what do they do, right? Do they start raising more aggressively? Do they up their target for the Fed funds rate going forward? There's so much here. Like I've been saying, Jerome Powell, he's in a no-win situation. He is stuck between a rock and a hard place, and he's going to be blamed from all sides for this. But there is no easy out. There's just no easy out, and that's the scary part. Looks like the markets have made back those small losses, but really still pretty flat on the day, considering.
Yeah, and NASDAQ now up close to 100. Volatile for sure, isn't it?
Yeah. Yep.
Go back and look at that SPY strangle that we had. There's the vol that just came out of it now. So it was at 410, 415 when we looked at it just before Chairman Powell started speaking. It's at 330 now.
Yeah. So and it'll likely continue to drop if things stay the way they are. Some additional policy firming may be appropriate. That was one of his statements. So far, based on the headlines, I don't think he's addressed the banking issue yet. That's what maybe everyone might be waiting for here.
In this kind of market environment, is there any great benefit in putting your money in equities where it's volatile and risky versus putting your money just in a bank account?
Well, that's just it. With risk comes reward, right? So if you can stomach the risk, if you're willing to take the risk, the potential payoff longer term could be huge. Certainly, looking back years from now, we'll be able to say, boy, that company was a bargain at that time. That particular bank that ended up surviving all this was a steal at that time. Can you tolerate the risk right now? That is the main thing, right? You look at something like FRC, okay? We're in February, this was $150 stock. It is now 15. So if it ends up surviving and long-term goes back to that, the reward potential is huge, massive, many times your money on the way up. But there's also a good chance that they don't. So, how much risk do you want to take? How much are you willing to accept? How much can you tolerate? And how long is your time horizon, right, for these to bounce? And so they also said that they expect subdued growth to continue. Wage growth has shown some signs of easing. Yeah. Raul, we talked about that this morning in our chat, where if you look back at previous times where banks have started to tighten, where the yield curve has been inverted like it is right now.
Mm-hmm.
Usually what we see is higher unemployment, right? We usually see equities in a downtrend and see significant selling there, right?
Mm-hmm.
And so, and a recession take hold. Now, in the great financial crisis in 2008, in the dot-com bubble and crash of 2000, 2001, we did see those things exactly. We saw banks tightening ahead of time. We saw the yield curve get inverted. But what we didn't see are those things to the extent that we're seeing them now, because the yield curve has been inverted. The inversion has been much wider than it was in those previous times, and is lasting, is remaining inverted for much longer. So I think it's, when you look at all these things together, it's pointing to some real tough times ahead. It really is. And the only question in my mind this morning was, will the Fed come in and save the day temporarily? Meaning, if they come in and they fire up the printers again and start flooding the market with cash, of course, the markets will go up, like we saw in 2020, 2021. We'll see that, but for how long? And eventually, then the crash that we're expecting will be even that much greater, right? Or will they allow it to happen now? Based on his quarter point hike, based on not increasing his year-end projections, right? Unless he says something completely different, and now he's talking about the banks, it doesn't appear that he's rushing in. I mean, look, they've already added money to those banks. So on one hand, he's already done some of that, quite a large amount over the last week or so. But it doesn't seem like he's completely pivoted from his agenda of fighting inflation, right? It's not like he said, well, inflation is not important anymore. We got to, shore up the banks. And so we're going to start cutting rates and doing QE again. I don't think that's what he's saying. So we may see this play out now and start seeing things falling apart here. But
take a look at the link I just posted. It's a red line version of the FOMC meeting. I believe it's the summary here. So take a look at the part that's in the middle there that's been highlighted. So they changed the language from the committee anticipating the increases in target range, and they've changed the wording to additional policy firming.
Right here, additional policy firming. So the committee anticipates, additional policy firming may be appropriate in order to attain a stance of monetary policy that is sufficiently restrictive to return inflation to 2% over time.
I like the idea of inflation getting back to 2%. Great for, again, our parents and people who have money in savings accounts, and people. I mean, we're getting to an age where we now are thinking about retirement, or we know people that are retired on fixed incomes. 2% would be great. I just don't know how realistic it is. And I agree with you, especially in the short term. I don't think it is.
Exactly.
But in the long run, I don't know if I'm optimistic about a 2% inflation rate.
I'm with you on that. I mean, I wouldn't be surprised or be against them coming out to say, hey, I think the target now is 3% or 3.5% or whatever. That's all fine and good. sticking with 2%, they seem pretty committed as they have been over the past year.
I have to say that, yeah, I have to agree with you. They have had that 2% number for at least a year.
Right.
Right.
And they've done what they've said they were going to do. In the past, the Fed was always, keeping things close to the vest and saying, we're going to monitor things from meeting to meeting. And if we see something that merits a move, then we'll make a move. Over the past year, they've said, we are gunning for inflation, right? We are going to do what we need to do and be aggressive about it in order to get that number back to 2%. Now, with all the hikes that they've done, we've gone from basically near zero rates to, what is it now, 4.75 to 5. They've raised almost 5 full percentage points, and yet inflation is still at above 6%, right? So it still feels like it's out of control. So how do you go from 6 to 2 in a short period of time? Sounds impossible. Now, the banking disaster will help the Fed out a little with this, I think, but them adding money back into the system does not. It goes against what they've been doing. So, as I said, no real win here for Powell.
All right. Any more headlines from what you're watching there?
I just see banking issues are so recent that there is so much uncertainty. Yeah, there's a lot of unknown. We were talking this morning about a list of about 190 banks that they've identified that may be in trouble. If that's the case, that's a lot of banks. That's a lot of banks. The only question is, how big of a problem is it going to be? How much money are they going to have to put up to save them? Will they do it for all of them? A lot of unknowns. Let's see where we're at. The Dow up to 200 now. S&P up 36. The Nasdaq up over 200. So we've seen a move. We've seen a move now since he started speaking to the upside. And they also say that Powell is now, let's see, Vice Chair Barr leading banking supervision review. Okay, so now they're going to start looking at how these banks have been run, and I'm sure try to put in some regulation to make sure they're run a certain way to avoid this from happening in the future, which is probably something that's way overdue. Because I believe a lot of this was negligence on the part of the people running the banks. But we've got to move now.
That is our special look at the FOMC announcement, probably the most exciting one of the year so far. NASDAQ, as we wrap up. As I look at my screen, NASDAQ up just about 200 points, 195, 197. So clearly the language from Chairman Powell is positive here for the market. The S&P on the futures up 31 points or so. Vince, I want to thank you for your time. If you haven't already, please subscribe to our channel. We're going to be doing these videos on a regular basis now, providing all kinds of educational content. If there's some content that you would like to see, please let us know. We want to thank you for joining us. My name's Raul. His name is Vince. We'll see you next time.
Take care.